Rumors about Nomura pulling back have been swirling for weeks now. So what are they doing?
Sherry, as you say, Nomura, of course, has been trying to rein in risk and figure out the best way forward since losing almost $3 billion in that Archegos saga. We heard weeks ago that Nomura's prime brokerage employees in New York were exploring other job opportunities and even telling key clients to start to establish backup relationships with other banks. Now we have confirmation that they're definitely pulling the plug on a large chunk of their hedge fund business in the US and Europe, and they've said they'll no longer offer cash prime brokerage services. That's the service which allows hedge funds to borrow against their stock holdings.
So how does this play into the earnings outlook?
Nomura's prime brokerage revenues in the US and Europe, fortunately in this case, is small compared with earnings from its other markets, businesses in those markets. And overall, the prime finance business makes most of its money in Asia. So the impact on earnings at this stage is likely to be muted, but obviously damaging for relationships going forward.
So what does this actually mean then for Nomura's future in the US?
Cherry, the story goes that the Nomura founder, has been wanting to break into the big leagues of Wall Street since he first visited New York back in 1908. Cracking the US is critical if you want to be a global player because it has the world's biggest pool of banking fees. And the CEO at the moment, who was appointed last year, he's been trying to expand the business in the US, even appointed a Wall Street veteran to co-head its Americas unit, promised to add non-Japanese outside directors, and the key plank was to earn more money from prime brokerage. And financing was supposed to be a big piece of earning money in the prime brokerage unit, but they'll now need to obviously find other ways to fulfill their US ambitions.